If you give me a bunch of ones and zeros, I can spend it on something else that'll take my ones and zeros. And that's really the evolution of money there. So,
Hey Lee,
yeah.
question. But yes, it's digital, but regular currency is founded and rooted to government, but cryptocurrencies are not. So how does that impact the volatility and longevity of cryptocurrency?
The answer is it has a huge impact, and it makes cryptocurrencies currently extremely volatile, which is why you see wide swings, and I'm going to have some slides on that in a moment, but the answer is the main reason that you don't see fiat or national currency swing widely is because there's a huge body of trust in those, and governments back them. But the reality is if we ever lose confidence in a government, those currencies can start swinging wildly real quickly as well. As you know, I mean, you can look at the history with some of the European currencies right before and after World War II. I mean, there was not much trust in them, so people carrying wheelbarrows full of money around, and that's really not any. I mean, it's still all trust based. It's, Chris.
Along those same lines, I mean, countries' credit is evaluated on an ongoing basis. Mm-hmm. Is there any sort of system of checks and balances for these cryptocurrencies?
Not currently that I'm aware of. And you still have huge issues like Monday of this week, a bank in Korea, South Korea, was hacked, and about $500 million worth of some sort of digital currency was stolen by somebody. I haven't heard who, but that's better than a truck rolling a truck up to the Fed and hauling off gold bullion. I mean, there's still a lot of issues related to how do you protect it, how do you value it, what's the underlying value. And I'll try to talk about some of those issues again as we go along. But people use cash because it's familiar, convenient. There's no cost associated with the cash. I mean, it doesn't cost me any money to buy money. It's just I have to have money to buy money. It's supposedly government backed, so that's why cash is. The U.S. dollar in cash is considered valuable. People use debit and credit cards because they're familiar and convenient. It's not quite as cheap as cash because, if you're a vendor, you have to pay a 3.5% fee, but they are pervasively accepted. And so then when you move into the realm of cryptocurrency, why do people buy and use cryptocurrencies? Well, anonymity is a big part of it. There's a huge subset of our global culture which desires anonymity. Some of it is for nefarious reasons, like narco terrorists and drug dealers and all that kind of stuff that want to find ways to move money around. But that's a very small percentage. There's just a huge number of people that don't trust governments, and they would love to have their money somewhere where the government can't get their money. And that's really a large part of what's driving that. But what a lot of those people don't realize is it's not completely anonymous. I mean, there is a digital record of what's going on, and with the right tools, it can be figured out who's got what. I mean, there's nothing that's perfect. I mean, it's all computer based, and somebody with the right tools, whether it's the FBI or the NSA or some other organization, maybe it's hackers, they can figure this stuff out, and it's cheap. Well, sort of, and the reason I say it is definitely cool and hip. I mean, people that trade money, buy and sell bitcoins, they tend to be a much younger, more avant-garde, more interested and open to new technologies and new things. And so, compared to those of us that have little or no hair, it's usually the cool and hip crowd. I mean, that have been the first ones to really benefit from this. But it is relatively cheap. If you want to trade, if you want to send funds from point A to point B using cryptocurrencies, if you want to send wealth, you can actually do it in a big numbers. You can send big dollar amounts of wealth from point A to point B for very low transaction fees compared to what you would have to spend with the traditional banking system. So when I say it's cheap, I'm not saying that it's cheap to get involved or it's cheap to make small transactions, but you can send millions of dollars for like a 10 or 15 or 20 buck transfer fee, if you want to. So when you're talking about big dollar amounts, it gets real inexpensive to be able to transfer money, which is one of the reasons that's driving it. So the anonymity and then the cheapness. Yes, Paul?
Lee, I gotta have something a little deeper than that. I can't buy into this anonymity cool and cheap reason. There's gotta be something a little bit more substantive that the use of this very, very important and increasingly important device than just cool and cheap.
Well, you know, the anonymity is really one of the big things that drives it. It's also people. I mean, this is my assessment of what people are doing, but if you'll follow, I've got a lot more information as we go through this, and hopefully I'll be able to answer some of your questions. And you know,
Kind of like the financial
That
version
seems
of
to me as a
anonymous
central
text.
question.
the central question is what?
Why people use it, to me, anonymity, cool and cheap is a shallow reason.
Well, anonymity is one of the main reasons why people do use it. You know,
People means people who are trying to do something other than letting anybody else know what they're doing.
well,
And that has, and you know what the connotation of that is. So if this thing is going to hinge on the fact that you can do stuff with this cryptocurrency that you can't do with bucks, let's get to that chase.
I'm going to sit here and tell you that the anonymity factor is a huge driving factor for the adoption of the cryptocurrency. I believe that the perception of anonymity is not well founded because of what I know about the cryptocurrency world and the technology that's in place. One of the reasons that governments are so resistant to and are becoming progressively more regulatorily involved in cryptocurrencies is exactly because of the anonymity factor. And I'll just say this, that, you know, all countries, all major Western countries are in the process, and Eastern countries are in the process of increasing the regulatory oversight of the cryptocurrency markets. There's a general trend to require businesses that are involved in cryptocurrencies to be registered as money service businesses, MSBs, as well as, in many cases, you cannot issue tokens and cryptocurrencies unless you've registered with the local securities regulatory agencies across these different countries. So right now, the anonymity is a big major driving factor, and it's a lot of times people just wanting to be able to have an alternative currency where their purchases and their profits cannot be easily tracked by the governments, which would like to tax them. And so this whole thing about the governments not being able to generate revenue on cryptocurrencies, which is a big deal, that's going to be changed over the next 1 to 2 years as regulatory oversight becomes more stringent. And so the anonymity is, in my opinion, and from what I have learned at this point, one of the major driving factors for why people are investing in it. And it'll remain to be seen what the impact on the valuations becomes as these regulatory processes become more mature. Yes, sir.
Is it your impression that some of these cryptocurrencies are kind of a closed system? There is a set group of people that are trading currency, or is it more
No,
open to the public? Or?
No, they're very open. Pretty much anybody can get involved. And let me kind of go through a little bit more of the presentation because I'm going to try to answer some of these questions. The first thing I want to do is try to address for you what a blockchain actually is. So all of these cryptocurrencies are built on a technology called the blockchain. And for me, the way I visualize what a blockchain is, it's literally the equivalent of a rail car. Now, somebody has to create the blocks in the blockchain. And they call these people miners. And basically, you can think of the miners effectively as the people that build the rail cars. But really what I say miners, what they're really doing is they're building a cryptologically sort of, think of it as the Starship Enterprise is surrounded by a force field. A block in a blockchain is a crypto-encased bucket of information, which you can't really get into unless you have sort of the right keys to unlock it and see the information that's in there. When you think about a boxcar on a train, they fill it with goods, and whatever those goods are, it could be lumber, it could be washing machines, whatever those goods are. The boxcar carries them from point A to point B. A block on the blockchain is really pretty much identical conceptually because inside of the block on the blockchain is information. And you can think of that as a ledger similar to an accounting ledger. And the ledger might say,